What is good, everybody? It's your boy, Reckless Ray Dinero, and we are back at it again with another episode of Future Financial Strategies. First, let's get to the housekeeping. If you're finding value in the content, you're liking the partial, every once in a while changing of the camera angle, I got a little bit of room to work with now. I get to be a little bit creative, play with the lighting a little bit. If you're enjoying the content, definitely hit the like. Definitely share the content. We're not trying to get rich over here by ourselves. Definitely subscribe. If you're new to the channel, make yourself known in the comments so that I can greet you appropriately. Shout out to all the new subs. We'll be doing the sub shout out at the end of the month, which is only a couple of weeks away. I'm happy to have you guys here. We're well on the way. We're over halfway to 500 subs. We're going to start blasting. We're getting ready to release some new lines of content. We're getting ready to start up the shorts game. We're coming at it. We're getting the watch hours. Those of you who are tapping in, it's going to be, don't know what day it is. Going to be Thursday, the 20th. Going into Bag Fortification Fridays. We don't fumble bags over here. We only fortify them. So for those of you getting paid this Friday along with me, we're fortifying the bag, which means that we're going to be putting the money in the appropriate places. We're going to be following whatever we've got lined out as far as what we need to do to get to our goals, be that budgeting, be that strategic investing, be that aggressive investing. One of the things that we're talking about today, obviously, is going to be following the money. We're going to be talking about inflation. We're going to be talking about real estate. We're going to be talking about paper assets. Obviously, we're going to start off with the real estate. It's one of my staple strategies that I'm looking to implement. Currently saving up for the second property, working down that trail, looking at opportunities, being perspicacious. But as usual, there comes a time where you just got to get your money up. So we are also looking in those realms as well, because I have a budget set for what's coming in, but I'm about to start considering doing some stuff to get that coming in faster. So we might bring that side hustle game back, because we got a lot of stuff going on over here in the YouTube streets, but unfortunately that is not paying any bills. So we're going to be looking and exploring some options there. It won't affect the stuff that I've obligated myself to, but as we're starting to work hard, you got to work hard and smart, and I am burning up basically every hour that I have available. So we're going to implement a couple of things to streamline some of my processes for content creation. So there actually is going to be more content as a result of this in different realms. But it's gonna be interesting. I'm kind of excited about it. I'm kind of excited about getting some of this stuff secured, because I got projects around the house that I want to get done. I got saving up for the next property while getting this property set up in the way that it needs to be to my standards, because it's currently not, and we can't be sitting around below our standards for too long. It gets real annoying. It starts wearing on you. But we're going to talk about this real estate market, because it looks like this commercial crash is happening. And what this is talking about, this one is specific about San Francisco, but you could literally slot in any third world city that you would prefer in here. And they're mostly unfortunately, there's a specific group of people that are running these cities, Democrats, that are changing laws. They're taxing the heck out of people. They're changing laws. They're making crime no longer illegal. They're releasing criminals back onto the streets. And these places just aren't good for businesses. Businesses are pulling out. This one is specifically talking about San Francisco. I mean, there's news articles about lawlessness in San Francisco. They've changed the laws. They're very soft on crime. Everything can be stolen. Well, this is talking about the results of what's going on here. So, one of the key things that they touch on is that these commercial spaces are upside down. These loans aren't getting refinanced at a lower rate. The banks aren't willing to refinance them at all because they're very much in loss. Like, the nature of how we're doing things has changed. The nature of people going to brick and mortars has changed. We order a lot of stuff. I mean, Amazon's taken over. You can basically order anything direct to consumer. You don't have to go be physically in these places to get their products anymore. And, in a city where they're making it legal to just walk in and fill up your cart or fill up your bag or snatch and grab and steal stuff, and there's no recourse, and if they pursue you, it's illegal for them. I mean, these businesses are just letting these leases go. They know that they're not going to be able to get them refinanced at a more advantageous or appealing rate. And they are literally just walking away and letting these places get foreclosed on, which makes it the bank's problem. Bank's also upside down. So now it's everybody's problem. And you look at these cities where it's not safe for the employees. It's not safe for the businesses. They want to set the whole town on fire, specifically the businesses within their own communities. And these companies are just walking away. And there's no one coming behind them to get these spaces at these rates. I mean, I'm seeing this in my city, and it's not even a result of people just walking in and stealing stuff, because it is still illegal to steal things where I live. But the prices, the rental rates, because these commercial spaces, as the rental rate comes in, that gets passed on to the business. So like, they have to pay that. It's the same with the housing. As those mortgage rates, the taxes increase, they start spiking all this stuff up. That gets passed on to whoever has to pay the rent to be there. So in the commercial space, you're seeing businesses just walk away. Like, stuff is just too expensive. Most of these commercial spaces are upside down as these loans are coming back up and interest rates are higher. So like, it just doesn't work. It's a lose-lose for everybody. And specifically in these cities that have made themselves into basically what I like to call third world cities, there's no incentive for them to stay there. They're not making money by being open and providing this service. They're not obligated to provide a store for these people who are stealing from them to shop at. They're not obligated to function in these areas where they're taxed to oblivion for the privilege of having their stores robbed. So they are leaving. They're letting these buildings, these spaces go. And now it's the person who owns it that was renting to them's problem, which ultimately becomes the bank's problem, which could have a cascading effect in the real estate market. Now, how does that affect people who are living in homes? Well, from what we've seen from the way this administration works, they're probably going to make those of us who are financially responsible and pay our stuff on time, we're going to get affected by this. Be it us somehow subsidizing, they just start making people pay more who are actually paying, or it's going to make it harder for people to get home loans because there's going to be such a draw on the bank's balance sheets from all these failed commercial loans that it will just begin to affect us. Another thing that I keep harping on is that both interest rates and home prices are still up. Neither has balanced. So we are going to remain stagnant. We're going to remain basically where we're at with the market. Are there deals? Sure. You got to do the math. They're probably a lot harder to find right now. But what I am noticing, at least here in my local market, is that stuff is kind of starting to sit out there. Like it used to be, you'd see stuff floating around and getting snatched up very quickly. And now, oh no, now Elon Musk is saying that San Francisco looks like the zombie apocalypse, which, you know, if they got all these people out in the house, it's tent city. You're right. It's a dystopian future out there. Happy I'm not in that market, as it doesn't look good. I'm happy I'm not in any of these third world city markets because none of them look good right now. But yeah, we're moving on. We're gonna get into another interesting story that I found that's real estate related, because we're gonna keep harping on the real estate. I like talking real estate. It's interesting to me. I'm gonna go ahead and share this tab. This is from Yahoo Finance, talking about the 5 cities that they. I'm gonna give my take on this because like this is kind of weird to me. The 5 cities that they're saying are places to buy to become a millionaire, or hold on. Buy property in these 5 states to be rich in 5 years. Now, I'm going to say this. My states are not on here, which sucks. But we got to own that L. We'll be there eventually. I don't know. I don't know the quality of the advice that Yahoo Finance gives, because like I've seen some other stuff that was pretty sketchy from them, and like some of the places on this list also look sketchy. First one though is Texas, and I do agree, but everyone from California is flooding into Texas. Unfortunately, they about to have some third world cities within their states that they're going to have to deal with, because those people are probably bringing their politics that ruined the wonderful state of California. Absolutely abolished it, absolutely destroyed it, gutted it for all that it was worth, and turned all their major cities into third world cities. I don't think there's one there that survived. And they're all moving to Texas now that it's been ruined, and they're probably going to take their voting practices to Texas as well. One can only hope that Texas does not accept this, that they keep resolute on keeping their state what their state is. But we'll see. Definitely property values are going up, though, because as those people flood in, you see what they're doing. You see what they're doing there. And those property values will flood. I mean, there's plenty of space in Texas, definitely room for expansion, but you don't want to bring bad politics from a state that was ruined into a state that's functioning and then expect to do the same thing there. It's very parasitic in nature. Next up, Washington. Now, Washington, I've heard mixed bag, man. It's partial third world city up there. I don't know. I don't know about this one. But apparently it has a dynamic and thriving tech industry. So it's got a good tech industry and a thriving economy. So those are good things. I mean, you'd have to look at what type of bills they're passing and what type of real estate laws they have and what the tax situation looks like. North Carolina, interesting. Like, okay. Apparently a lot of people are relocating to North Carolina as well. I did not know that. Has been adding residents at a feverish pace for years. And in 2022, its population grew faster than all but 2 other states. Ooh, nice. I mean, Charlotte, yeah, they do have some very nice areas up there. Good places to be. Definitely with the ability to work remote. A lot of people are wanting to get by where they can touch grass, do stuff outside, actually looking at lifestyle versus I have to be here because this is where the job is physically located. Granted, a lot of that's coming to an end because they're getting you all back into them offices. So we'll see how that works out. Says so they're saying the absence of Florida on this list. Florida should not be on this list. You can't get insurance there. All the insurance companies are pulling out. And I understand that people who live in Florida love that. And I've got my own tinfoil hat conspiracy about why that's going on in Florida, because it is very well governed. They got DeSantis down there, and it's coincidental that all of a sudden this year, out of all the years, because Florida has a hurricane every year since I've been alive. It's always been bad, always gotten flooded. They've always rebuilt. But all of a sudden this year, there's no money, and all the insurance companies are pulling out. I'm just saying, it sounds weird to me. I don't I'm not fully understanding because, like, honestly, I haven't heard anything in the news or any updates about Florida just getting decimated and flooded off the map. So having it be on a year where realistically, like, we haven't seen that detrimental hurricane, absolutely atrocious hurricane season, but like all of a sudden this year specifically, all the insurance companies can no longer give them flood insurance. That's weird to me, but no, it shouldn't be on the list considering that it's going to be a high risk place to live moving forward. Because now, if you get flooded, you've got to be able to rebuild your house yourself. You've got to be able to fix your house yourself. You've got to front that money. So we'll see what the market does if some sort of insurance gets down there, but the insurance that's going to be left if all the major players come out is going to be very predatory. Like, I don't know that we have enough free market as far as insurance goes to where the market will heal itself, because we don't have a true capitalist market, and like the big players basically make the insurance company. Like, it's basically monopolized. So we'll see how that goes. But Tennessee has recently emerged as a sought-after destination for real estate investment. Interesting. Cities like Nashville and Memphis are experiencing rapid growth driven by factors such as affordable housing. Oh, nope. Favorable tax environment. I mean, they could have stopped this at affordable housing. Like, I'm out on that. That means that these places are going to be turning into third world cities. Like, I heard Memphis is bad. Nashville, mixed bag, heard mixed stuff about that, but I'm not trying to go to Memphis. I'm not trying to go anywhere where it's not getting gentrified. If we're investing to create more slums, like, that's not helping society. That's not helping these cities. That's creating more of a problem than a solution. Like, yes, people are going to be in houses, but the quality of the people, the quality of the houses, the quality of the real estate rates, the rental rates, that doesn't sound like a boat of like if they're throwing out affordable housing as like their selling point for why a bunch of people are going there, I don't want to be around those people who need affordable housing. Like, I'm out on it. I'm out on that. That's not a good indicator of somewhere that I would want to be, and I'm not trying to be a slumlord. So we're gonna keep it pushing. Colorado. A lot of people have been going to Colorado. Colorado has been booming. They were the first green, not libertarian, but green state. You know what it is. If you know, you know. And as a result, their economy has exploded. Every time I've been there, I've had a headache because of the altitude. It's awful, but the city looks nice. There's fun stuff to do. They have awesome restaurants. I know that for a while there, the amount of people flooding into that city was ahead of construction, and people were waiting to move into houses, and they were basically living homeless while they were waiting to move into houses, which is crazy to me. But people really want to be there. They really want to be in that state. It seems like a cool place minus the headache. And I'm pretty sure, like, if you stay, like, both of my trips out there were very short trips. I had enough time to go grab a couple bites to eat, stop by a couple of places, see a thing or two, go to a meeting, come back. And I had a headache the entire time. So, like, I wasn't there long enough for my body to acclimate to the altitude. And when you just fly in, you just show up with an air bubble in your brain. It's not great. But I enjoyed it. I did enjoy that place. So, Colorado as a state, like, they're having to pay people back because they're collecting so much in taxes for the green stuff. And, they're flush with money. Like, I really expect a lot out of Colorado with all the money that they're getting flooded with. I'm hoping that they're putting it to good use. Only time will tell. We'll see. But there aren't tent cities. I mean, obviously during the winter it gets way too cold for that, so you ain't got to worry about that there. But there aren't tent cities, and that's a bonus at this point. Like, if you don't have tent cities in your city, in very public places where people are trying to get around and get stuff done, and there's just people living in tents on the sidewalk, you're doing good for yourselves at this point. Like, I mean, the pandemic done broke a lot of people, and they're just out here living in tents, waiting to be saved, and it's just not a good look in my opinion. I don't know. Like if we're gonna allow this, then we're gonna allow anything. So the next thing that we're going to do is going to be more along the lines of following the money, because I had a conversation on a panel a week, maybe like last week, a couple weeks ago. And there was somebody who was going hard in the chat talking about inflation is exactly what the Fed says it is, that it's not that big of a deal, and that it's over. And I'm like, the prices on nothing has come down. Nothing. Food hasn't come down. Cars haven't come down. Houses haven't come down. Interest rates haven't come down. Nothing's come down, but like since they gave us an arbitrary number that says, because I mean, apparently inflation's back down to about 3%. But the prices on everything are still exactly where they were at, which is high. Wages aren't going up. People aren't even getting raises. Like, are you kidding me? Like, this isn't a scenario. Like, people are getting away with what they can. Everyone's taking care of themselves as dog eat dog. But because the Fed tells you a number, they want you to believe that number. And I'm like, okay, so are we gauging this as the stuff's not going up any higher? Because like if you're getting $50, this is a hypothetical. If you're getting $50 and then food that used to cost $5 now costs $20, you can buy less food. But are they going, well, inflation, well, it went up to $20, so like you can still now barely eat, but it's not going up as fast anymore. Like, that's not a benefit to any of us, really, unless wages and home prices and everything else is going to balance out. Like, our car price is going to balance out. Like, where are we sitting with that? Like, if you're going to buy a used truck right now, you might as well buy a new truck, because they're asking the same prices and getting them, because that's the nature of the supply and the demand. Like, we have a chip shortage, manufacturing slowed down, all sorts of things have slowed down. So when we're looking at these scenarios and these things, I'm like, okay, well, I'm trying to see like some numbers change. I'm trying to be able to afford more groceries. Like, I want to be able, like, like prices should be coming down then, right? I mean, we're in a scenario right now where interest rates and home prices are up. This is like a blue swan event. Normally you get one or the other, and the other is supposed to offset the other. And like now we're currently in a state where we're getting neither, which leads me to believe, because I don't think this is people that are still just buying stuff. I think that the fact that we had corporations buy up a lot of property, I believe that the real estate market is being partially manipulated, because the residential real estate is being bought by commercial entities. And if you have large commercial entities buying up the properties, that artificially raises prices and prices people out. So this isn't, if it's not driven by people, then like you can't, that's not an actual reflection. But that's also one of the reasons why these markets are staying up together. Because normally if interest rates go up, home prices are supposed to come down because there's less buyers. Interest rates are up right now and home prices are up. Or if home prices are up, normally that spike comes from interest rates being down, which we did see that happen. The interest rates were super low. We were getting like between 1% and 3%. You won the lottery. And that spiked home prices. But when the interest rates went up, the home prices did not go up, because you had BlackRock, you had Redfin, or whatever that site was, you had Zillow. All these entities started buying houses at over asking, with the interest rates going up, and now the prices are just up with them. Really interesting. But on this part, we're going to follow the money. So this is how much aid the U.S. has sent to Ukraine, because when they printed all that money and gave you $1,200 and you were happy, and we thought everybody was winning, and then they kept giving you those child credits. They paid for you to not pay your rent for a while. They paused that. You thought you were winning. Stop the student loans. You thought you were winning, like this whole time. And then they hit that button on that machine, because they didn't actually print actual money. We don't print money anymore. They add more zeros on to how much money exists on a computer. And when they do that, that also causes inflation, and it affects everyone. And then they take the money that they made, the made up money that's backed by nothing, and then they send it places. And so I wanted to dial into one of the things that one of the places that they sent for this episode. So we're gonna broach into this. So when we talked about we had to save Ukraine, yeah, printed a bunch of money. They gave y'all a little bit of money, and then they gave Ukraine all the money. And then businesses got a big chunk of the money. The people who are already rich got a lot of the money, and you got basically crumbs, and you were happy with the crumbs. But let's talk about where we sent our money, because this is all of our money at this point. Because the government doesn't make money, they make up money, and then we pay for it via inflation, which is an additional hidden tax that people don't get really nearly upset about enough. But hopefully this breakdown kind of wakes some of you up to the reality of what we're currently dealing with in these United States of America and how they're stealing your money. I say this all the time. They're stealing your money. While you're arguing about modern women, they're stealing your money. While we're having the gender war, they're stealing your money. While these MGTOW black pills are sitting out here talking about they're going to take their ball and leave and get rich, your money's being stolen. While these women talk about how men are terrible and they're gonna Me Too the whole world, your money's being stolen. While you're talking about you want a high value man, your money's being stolen. So we're going to talk about where your money's being taken and given to, because we did not vote on this. We did not have a say in this. They just made up money, and then they did this, and we all paid inflation for it. And me personally, if they're going to give this much money out, and then you'll have your leaders, you'll have your Anton Daniels talking about we're not going to talk about reparations. Yeah, your money's being stolen too, sir. We're gonna have Wall Street Trapper talking about $40 is not that big a deal. Well, your money's being stolen too, sir. And we have all the money for this stuff, but we don't have the money to infrastructurally set people right here. Like, actually, hold on. I'm asking a question to Google right now. How much would it cost to pay reparations in the United States? This is a good one. Okay, so let's see what they're talking about. Okay. Slavery reparations cost U.S. government 10 to 12. So they're saying what so they're saying 800 billion there. They're saying that's in California. They were trying to get 800 billion. And they're saying 151. Okay, so it would be a lot of money. But I mean, we sent okay, so we sent a lot of money over here. So like on this page that I'm looking at, that we're looking at together, this is how much we sent to Ukraine, and this was between January 24th of 2022 and May 31st of 2023. We sent $3.9 billion in emergency food assistance, healthcare, refugee support, and other humanitarian aid. You know what? I'm okay with that. I'm okay with that. They want to give them some food. They want to give them some healthcare so we can feel good. I ain't got much smoke for that, for humanitarian aid. Okay, 3.9 billion. Word. It's 5% of what we sent them. Okay. Here's where all the red flags get dropped on the plate. Because I'm not going to argue the humanitarian. You want to give them food, you want to give them support. Bet. $26.4 billion, 34% of what we sent them, was for budgetary aid. Budgetary aid through the Economic Support Fund. Now, what this is, okay, through the Economic Support Fund, loans and other financial support. What this is they're making up money and loaning it to them, money they're never going to get back. They just want them to continue paying. But the deal is this, there's a double kicker on this because the government doesn't pay that. We do because they made up money and sent it over there, which inflated our currency. That's the reason eggs went up 50%. That's the reason cars went up astronomically. That's the reason car parts and repairs went up astronomically. And then they get to get paid the interest on that loan, but we're the ones who backed the money that they sent over because they didn't have the money to begin with. They took it. Well, they didn't take it. They made it up, and then us paying our taxes backs this loan. So then you've got another 24% for security assistance. That's training, equipment, weapons, logistics support, and other assistance provided through the Ukraine Security Assistance Initiative. Who voted on this? Who voted on this? Who okayed to give all this money? When did we as a society stop caring where our money went? We complain about it all the time. Everybody complains about what the 1% are doing, about getting to the bag, about getting rich. But you don't care about this. You don't care about where our money's sent. We don't care about how our money's utilized. And we need to start caring. We need to start having these conversations. Why is this never a topic? Oh, yeah, it's because you want submission from women. Oh, it's because you want a high-value man. Oh, it's because we're listening to two immigrants on Fresh and Fit talk trash about the culture that made it so that they could leave their shithole countries and come here. Oh, yeah, I remember. Meanwhile, they're stealing our money. And they're sending it to all these places where we ain't got no business. Nobody voted for this. Nobody got an okay for this. And if they did, we need to know who voted on this. We have no transparency in this government. We don't even know who the enemy is at this point. We don't know who's voting on what. We don't know where their allegiances are, because when I look at stuff like this, I don't see an allegiance to America. I don't see an allegiance to this country. I see a bunch of citizens that are no longer acting as citizens. I see a bunch of people who are distracted, and I see a bunch of people who don't care as much as they say they care, because we're not having conversations about this. Let's go on to the next one. 31%, $23.5 billion for weapons equipment from Defense Department stocks provided through presidential drawdowns. I'm going to ask another question to Google. What is a presidential drawdown? It allows a presidential drawdown. It allows for speedy delivery of defense articles and services from Department of Defense stocks to foreign countries and international organizations to respond to unforeseen emergencies, such assistance can begin arriving within days or even hours of approval. So they literally said, okay, we doing this, and then just sent them stuff. That's what the president, that's how this was. So we just within days gave them $23.5 billion in weapons and equipment from defensive stocks. That's stuff that we paid for and bought, that we just gave. We just sent them over $23.5 billion in our stuff that we just gave to them within days. But nobody should talk about reparations. Nobody should talk about doing setting stuff right here. It's our job to bootstrap, per some of our gurus. You just get out there and get to the bag and keep working. They can send $23.5 billion within days. Okay, cool. $40 ain't that big a deal for those of us who are financially responsible to pay for those who are not financially responsible, but they can send $23.5 billion within days of money that they made up, that we're the backers of. Interesting. And then the last 6%, $4.7 billion In grants don't have to be paid back, people. And loans provided through the Foreign Military Financing Program. I don't even know what that is. So we're going to ask the question. What is the Foreign Military? Hold on. I got to get back to the page. That's too many words for me. Military Financing Program. Military Financing Program. Let's see if we get an answer for this one. FMF provides grants for the acquisition of U.S. defense equipment, services, and training, which promotes U.S. national security by contributing to regional and global stability, strengthening military support for democratically elected governments, and containing transnational threats, including terrorism. Hold on. Oh, close. Including terrorism and trafficking in narcotics, weapons, persons. Wait a minute, folks. Hold on. So they gave them money. Wait a second. Hold on. See, we stumbled into some shit. It's been 30 minutes. We have stumbled into some shit, folks. They used a program specifically. I mean, I guess they could put this as the but I mean, Russia's a democratically elected government too, even though we say that it's not fair. But I mean, it's no different than Ukraine's democratically elected government that people say is not fair. I mean, I don't know. I don't know. But it says specifically this and containing transnational threats, including terror. So, like, Russia's not a terrorist. Russia's not a human trafficker, last I checked, and narcotics, weapons, and persons. But we sure as hell used a mechanism that's specific to those things to intervene in two democratically elected countries' issue over land. This 4.7 billion is a super red flag, and they magically made that up. They actually gave them more for this on this sketchy premise than they did for the actual humanitarian aid, which is food and stuff. Their total military contribution, which is shown here on this graph, was 61%. I mean, when we're following the money and looking at the fact that we're all getting hoodwinked, we're getting wealth stolen out from under us. And I mean, this affects some more than others. Like, I'm still going to be able to climb. I'm still going to be able to make stuff work for me because I use all the tools available. I'm not sitting here telling everybody to pay in cash and not have credit. In all honesty, if they're deflating the dollars, if you're using credit to buy assets, then technically speaking, if they keep doing this, you come out ahead because you pay them back in something that's worthless anyway. Because the dollar is worthless, but like doing stuff like this, we've printed more dollars within the past 5 years than we ever have in history. But you got your gurus out there telling you to like save up all your cash and fight inflation and use cash, and nobody uses credit. Rich people use credit. Just going to throw that out there. They use it a lot because you get to borrow in cheap dollars to buy assets, and then you repay what you borrowed in cheap, worthless dollars. I mean, they're not using credit to buy Gucci belts. I'll give you that. But this is ridiculous. Like, this needs to be the battleground. Like, this whole identity politics stuff, everybody's collectively getting robbed. They are distracting you with BS, and they're taking your money. They will have you destitute. They will have you poor. More tent cities are going to happen on purpose, because this isn't a scenario where you can just strive to be average anymore unless you want to be in a tent city. And it's on purpose because they're doing stuff like this. They're taking your money, they're inflating the currency, they are attacking you monetarily to put you into a position where you can do nothing but be a slave. This needs to be the battleground. This needs to be the hill that we die on, because if you don't, it's going to be the hill you die under. And I'm not trying to be doom and gloom, but like, this is something that's affecting the entire nation. This is what they're using to rip our nation apart. They're doing whatever they want. If the government is non-representative of the citizens, then what are the citizens left to do but to stand up? We need to hold them accountable. We need to understand where our money is going, because it's not their money. They don't make money. Those people's money, what they're paid comes from us. They are the welfare recipients here. And they're not doing the bare minimum of the job that they were elected to do, which was to represent the citizens that put them in office, which is us. And no one's holding them accountable. They are actively failing this nation. They are actively putting out more and more distractions to keep us fighting amongst ourselves, so that way we don't look at this. Historically, even the lowest in the hierarchy of wealth in this nation were financially literate and understood the importance of what the government was doing with their money. They've got you thinking that it's not your money, and it is. And we're going to leave it there. Might talk more on this come Thursday for Guns and Butter, which will be going on. They made their valiant effort to shut us down. We will not shut up. If you want me to shut up, you're gonna have to come see me face to face, which I would much prefer, because I'm built for that too. I'll dog walk you on the panel, but like, come see me, bro. You guys who want to shut down my channel, pull up, because we're not gonna stop. Matter of fact, we're doubling down. I had a whole conversation, which is funny because last week's Guns and Butter, which was stopped abruptly because of the bombing that happened on our show, we sat and talked for like another 2 hours offline. Easy. It was like 2.5, 3 hours probably. It was super late into the morning. And y'all ain't stopping nothing. Nothing is stopping. We're doubling down. We're going to get the message out. We're going to continue to have the conversation. You're going to see people from different walks of life, different tribes, different camps coming together and having conversations, starting to posit ways to fix things. And those of you who just seek to destroy, you're just going to have to either come see me, and if you do, send the expendables, or you're just going to have to sit there and watch, because now we're going to go ahead and implement some policies and procedures about bringing people up, so that way you can't do this anymore. Fool me once, but like old George W. said, you can't fool a fool 3 times. So let's jump on to the next thing. This one is going to be interesting, and I got to give a shout out to Wall Street Chapter, because like, he definitely does make sure to make it a point to get these ladies educated on the markets. Now, I'm not much of a trader. So I would say that I just invest. I do not trade. I do not play the market. I'm not in and out on day trade stuff. Most of my positions are at least a year, unless we have to pivot. And like, most of the time, that's just consolidating out of bad income plays into better income plays. But there is a rise in the amount of female traders, and I'm gonna Wall Street Trapper. I always see him making time to educate and bring the ladies into the fold and make sure that they don't feel excluded. But according to a survey of 2,000 people commissioned by high growth trading platform capital.com in October of 2021, this is a little bit old, when asked how they would invest 1,000 pounds, now this is European, more women than men said that they would save it. 41% women versus 31% men, or invest it in an ISA, which 30% of women and 28% of men. Despite women's propensity to save, The same survey also revealed that just 29% of female respondents in the UK have traded or invested in stocks and shares online, compared to 47% of men. When asked why they were not investing or trading online, 58% of female respondents said that they thought it was too risky, and 52% felt they did not know enough about online trading and investing. Now, this is interesting for me because, like you said, over in the dog pack, we got some anomalies over here. Like I like to think that we've hammered this in, especially if you've adopted the tenets of the red pill that cash is trash. We do not just save money. We save in the market. Shout outs to Wall Street Chapter. The reason that I go into paper assets, especially with the conversation that we just had about what they're doing with the money and how they're inflating it. When inflation happens, if you are saving money, whatever you're getting in the bank is offsetting a portion of the inflation, but you're still losing buying power. I'm going to say that again. If you're saving money in the bank and you're holding large sums of cash, while you are getting an interest rate, and those interest rates are above 0% now, it's only offsetting a portion of the inflation, and you are still losing buying power overall, which means that basically you're going broke slowly. And the reason I'm an advocate for saving in paper assets, Bitcoin, real estate, if you can, well, I mean, honestly, I look at it the way that a lot of the people who are in precious metals look at things. Like I have tiers. So like the beginning tier is saving cash. And after it hits a certain metric, that needs to move into a market or into an opportunity. Right now, I am so dialed into what's going on with the money that I do not save in cash. Like I'd rather save in paper assets at this point. I'd rather throw it into a ETF that is covering the market, or a dividend ETF, or a bond ETF even. Something to protect that pays off a little bit while I'm holding it, and we keep it moving. But then after the paper assets get to a certain level, we kick it over into something else. Like that can be pulled out, redistributed into real estate, for instance. Or as you're saving and going into these paper markets, like if you have a portfolio set up like what mine is the goal of, which is a money generating monster, now you're getting kicked off every month. You're getting a certain amount, and like you get to redistribute that. Like you can rebuy in, which is what I'm doing right now because I haven't hit my metrics yet or my target numbers for certain positions. But you use those funds to buy into the next piece, and it becomes a snowball. I think more people after the pandemic, after seeing the price of eggs go up and everything else that they use regularly go up exponentially, very fast, very, very quickly. I believe that everybody with any type of sense can no longer look at cash and be like, oh yeah, cash is king. I want to have all my money in cash. I'm just going to save everything. Like you're seeing everyone else get rewarded, especially those of us in crypto lately. Like, I mean, y'all been watching us get rewarded all for a while now, even with the dips. And like, people like to tap in and be like, oh, the crash just happened. And I'm like, yep, still fully in the market, still fine about it. Because I don't need the money. And then the next bull run that comes around, oh man, I should have bought in when it was low. And I was like, yeah, but you didn't. I mean, you don't take the risk, you don't get the reward. And I mean, at this point, I don't, for me, I see more risk in holding dollars than I do in holding any of my top crypto holdings, period. Like I would much rather have those because I have ways that I can move those around. I can get interest off of them. I can do something with them that's going to benefit long term. And yeah, I mean, that's pretty much all I got to say about that. But I do notice that like a lot more women are having a lot more of those conversations, when you're in the back channel. Like obviously still there's a disproportionate amount of men that are active, but you're starting to see women who are wising up, waking up, and understanding that, if you're going to be strong and independent, you better have your ducks in order, because stuff can get bad really quick with the way our economy is right now. And we're going to close it out on that. This is your boy, Reckless Ray Dinero. Definitely like, share, and subscribe. We're going to get back in here. Like, share, and subscribe. Hit us with some of the support. If you share this, send some people our way to sub to the channel. We're fighting our way up to 500. We're trying to get those watch hours up. I got plenty of content on this channel. If you go back, Crypto Portfolio Updates is about a portfolio that I've built, my ideology and logic behind the moves that I make in the crypto space, and like what we're doing over there. Future Financial Strategies, we talk about, macroeconomic topics over here. I've got some strategic videos, definitely updating on that. We're working towards getting a private banking relationship, which is the only reason that I believe in using traditional banks. And, navigating these financial times, this financial battle. We're trying to make sure that the information's out there for those who care to ingest it. Not here for everybody, but I'm here for somebody. And if you're that somebody, then let's get it popping. Let's get it rolling. Let's get your finances in order. And let's keep it moving. Also, we've got Guns and Butter, which is an open panel live stream every Thursday evening. It's between 7:30 and I'd say 8:30 Central Standard Time, depending on when I get off work. Was when my day ends. Sometimes they run late. Sometimes they run late on Thursdays. We try to have it not run late on Thursdays, but there's only so much I can do because I am very dedicated to my business, and we got to make sure these customers is happy. But topics covered there, anything from macroeconomics, politics, political commentary, political debate, relationships every once in a while. I'll be out here in these YouTube streets. You guys see me talk about relationships basically everything else besides here, because that's what people want to collaborate with me on, which is fine. First in it, we'll talk about it. But my focus is fixing this country, and if we can't fix it, getting as many people on the ship to be able to navigate the collapse of it as possible. And there's preppers. I'm a financial prepper. I don't believe in digging a hole in the ground and going and hiding in a cave and being stuck in the country that's on fire. Like I ain't about that. I want everybody set up to where you got your passport, we can be up and out of here, and actually leave with the lion's share of our wealth. Because that's what it's coming down. That's what it's going to come down to if we don't fix these things. Either that or being able to resist against them trying to put you in a position of perpetual slavery. You should have agency in your life. And I'm trying to make sure that as I see them setting up these weapons that are used against the citizens, that are used against us, that, I'm throwing out some counter stuff that you can be doing to start digging your way out of this hole. So I want everyone to be a financial prepper as well. I mean, you can be a prepper, not knocking those guys. Definitely should be prepped. But you should also be able to sidestep this should you choose. It's not a responsibility to burn up to save a piece of land that technically ain't even yours, because the government's just going to come and take it. So yes, it's your boy Reckless Ray Dinero. Hope you guys are having a great week. Hope you're ready for bag fortification Friday. And yeah, I think that's going to be it. Like, share, and subscribe. We're not trying to prep over here, get rich by ourselves. There's plenty of room in the wolf pack, the dog pack. We got all sorts of canine packs over here. Now, it's up to you, now that you have this information, to act, implement, and join up. So I want to give a shout out to the wolf pack. Hit me up in the comments. Let's hear it. Ow!
Let's go. I pull up.